we're talking about financials today with a focus on life insurance. Digant Haria is joining us. He's founder at Green Edge Wealth. Digant, great to have you on India Market Open on NDTV Profit and speak with you once again. So we wanted to start this conversation off with what was a very big story last week and want to understand your perspective on it. Of course, once we have you, we want to talk all things financials. But I'll start with the life insurance bit and the surrender value conundrum. Now, just a couple of lines for our viewers who are tuning in. IRDAI has proposed better surrender value terms to protect consumers and policy holders. This is after multiple drafts. Now, the question is, what is going to be the impact on life insurance companies? Digant, HDFC Life saw a positive response from the street simply because they came out and they were very clear that the hit to our margins is going to be about 100 basis points. Do you see in the long term surrender values not having too much of an impact?
Morning, Tamanna. Good to be here. See, this life insurance, the surrender value thing was probably, the last bit of, our big regulatory arbitrage that they had, which needed some sort of normalization or, for it to come in favor of the actual policy holders. So I think, this whole regulatory tightening started 2 years back, when the taxation on ULIPs had changed. And, after that, we have seen multiple rounds of tightening by the regulator. I think this is the last leg. This leg hits the insurance companies the most because see, all these insurance policies are 5 to 20-year policies, or sometimes even 30-year policies, and in between a lot of people end up saying, oh, we don't want this policy, they don't pay, and then they end up earning like 2 to 3% kind of returns on the policy instead of a 5-6% kind of an IRR. So that was like a good contributor to the margins. HDFC Life, see, they always had a reasonable amount of non-participating products, what we call as the new age higher margin products, whereas someone like an LIC has a lot of those traditional products. So someone like HDFC would have 100 to 200 bips impact. Someone like an LIC can have a slightly higher impact of this. But all said and done, this was overdue, Tamanna. This had to come someday. It was very unfair on the policyholders' part to bear such a big loss compounded over such a long period of time. So I think it's a healthy change and probably the last leg. The sector has underperformed quite a bit over last 3 years. I think we are setting stage for some bit of revival in this sector, say 3 to 6 months later in time.
So, in interesting way to look at it, you said LIC could have a slightly larger or higher impact than HDFC Life. What do you reckon it could be? And focus on LIC also because it is the largest, has the largest market share. It is still the biggest player. Do you think LIC could also see this revival that you're talking about? Because if we're talking about underperformers in the space, then LIC is also on top of that list.
Yeah, but see, LIC has slightly different structure. So LIC gains from two things. One is if it is able to sell more policies, but a bigger component to the embedded value of LIC comes from the movement in the equity markets. Okay, because a large part of their gains in the equity portfolio, they eventually sit in the embedded value of LIC. So LIC will do good, if the markets do good, I think LIC will do good irrespective of this hit which comes from the surrender value policy changes. But yeah, LIC will be more linked to what the market does. Like if tomorrow markets correct 10%, in the next 1 year, you will absolutely see very little movement in the embedded value despite them writing new policies. So LIC is slightly different, I would say. But the key for LIC would be to move a little away from their traditional products and get into more participating products where they don't have to share all the fund upside with the policyholders. That is a slow process. I think only 5% of their business comes from that. They have some targets for this business to go to 10 and eventually 20, but they've just taken baby steps. So I think I'm bullish on the whole sector. If somebody takes a view of 6 to 18 months, and yeah, I think HDFC Life on the private side, LIC on the PSU side, a good combo for investors to take in this overheated market.
Overheated market indeed. Okay. Digant, the other aspect, and just moving on from insurance, Neeraj here, good morning, is just the start of what seems to be a banking rally. A lot of funds coming out with the NFOs as well, and talking about how, while banks have largely been um, immobile, if you will, maybe, just maybe, we might have a start of a private banking up move too. Is there merit to the argument of private banks finally making a move? And is there growth to back that?
Morning, Neeraj. We have been talking about this for almost a year and a half. The private banking space has been absolute laggard. The valuations have corrected so much, and every time we feel that okay, this is the only pocket which has not gone to madness or to levels which we can call expensive. So while that is true, Neeraj, on the fundamentals, valuations are fine. Maybe now the elections are over, so you will see the liquidity in the system improving. So the deposit tightness that we are seeing, that may also come off. Credit cycle is benign in India, for private PSUs, for almost for all sectors except microfinance and personal loans. So, this sector can rally, but I still think, Neeraj, that this sector was so overowned in the last decade that if the FIs don't come back meaningfully in India, which after elections also they have been net sellers, it will be very difficult for these large four to rally. Specifically Kotak, HDFC, they still have some issues to be sorted out. HDFC in terms of merger, Kotak in terms of the regulatory ban that they have. ICICI Axis can probably do better, but again they're very very overowned. So you need the whole liquidity thing to improve. The fundamentals are fine, Neeraj. There is no problem with the fundamentals of a lot of these. But yeah, I think, the FIs have to come back. So us, the fundamental analysts and investors, we just keep on praying someday the FIs will come and stop selling these private banks, because till they sell, you can't expect a very big rally in this sector. It
So
was
Digant,
highly overowned in the last decade.
so Digant, in which case, in some sense, sorry, I'm just trying to get this. Would you be a buyer in insurance but not be a buyer in banks?
I would think so, Neeraj. Like
Okay.
if somebody wants to play financial sector, being underweight on private banks will not be a bad strategy, because for private banks to move, there's a big variable, which is the FIs have to come in a reasonably big way, or they have to stop selling what they've been doing for the last 3 years. Whereas insurance is quite a bottom-up sector that the growth is bouncing back, the regulatory tightening is over. So if you ask me, general insurance, life insurance, something different like say a gold finance, these things make much more sense than putting it in the large four private banks. At least that is the view that we are carrying, Neeraj.
Let me take that forward with you, Digant, because interesting note out by Bernstein, and they talk about Muthoot. They like Muthoot. They talk about Bajaj Finance, and they talk about IndusInd Bank, and all three interesting names, because you're in the financial space, but you're not the big private bank kind of play. Let me start with your take on a Bajaj Finance.
Yeah, so Tamanna, see, Bajaj Finance was the leader when it came to the physical buy now pay later model. Like you go to a Vijay Sales and you buy your TVs and all that. They are leaders. Like they still have more than 50% market share. But then Bajaj Finance lost a bit on the online. Now a lot of shopping has moved online. So in that online space, they are just one of the many players. They are not leaders, and which is why we saw that last 2-3 years Bajaj Finance, the stock has struggled. Their earnings and the growth trajectory has also come off a little bit. Their growth is coming from entering into traditional products like microfinance, tractor finance, car finance. You would expect Bajaj Finance to do all the latest high tech things, but actually Bajaj Finance is doing all the very very traditional things to grow. So, which is why I feel that you will not see that valuation excitement in Bajaj that we saw in the last decade. But yeah, having said that, 3 years of time correction is done. Stock is at say 4.5 times F26 book. So not a bad play, but again, this is going to suffer the same fate as large private banks. If your Axis, ICICI, Kotaks of the world are going to run, only then Bajaj is going to run, because more or less all these have similar kind of ROE profiles and the technical setup on the shareholding side. So Bajaj Finance, I will not rate it different from say an ICICI or an Axis for
Okay.
an investor.
Okay, so then what do you think are those when we're talking about the next leg of this bull run. Obviously, it can't move ahead without financials. What are the 2 or 3 pockets and picks that you see as really having that upside?
Yeah, so one of them could be this whole insurance space, general and life both. We spoke about it. Second could, in this financial space, second could be, this the gold lenders. In gold lenders, Muthoot Finance is obviously the largest of them. They have the tailwinds from gold price moving up, and then regulator has also punished a lot of these gold lending companies for bad processes that have been followed. So Muthoot Finance is one standout. And I think that private banks may still continue to lag PSU banks. We had an election scare and PSU banks have been going sideways since then. But I think on an ROE basis, you will still be surprised by what the PSU banks can do versus the private banks. So I would still say that having private PSU banks is a better option, and probably they are the ones who are going to lead the market and not the private sector banks.
What's your top PSU bank favorite, Digant?
So the best company is SBI, but probably the best stock could be Bank of Baroda because it has underperformed and there's some kind of RBI restriction on it. Once that goes away, I think that could probably outperform the other PSUs.
All right. Thank you, Digant. Always a pleasure to chat with you. Digant Haria there with a very comprehensive view on the financials landscape.